ratio is a key financial metric used to compare a company's market value to its book value, helping investors assess whether a stock is undervalued, fairly valued, or overvalued. It is calculated by dividing the market price per share by the book value per share. The market price per share reflects the current trading price of the stock, while the book value per share is derived from the company's balance sheet by dividing total equity by the number of outstanding shares. The book value represents the net asset value of a company, essentially showing the value of its assets minus liabilities. The P/B ratio is particularly useful for evaluating companies in asset-heavy industries like finance, manufacturing, or real estate. A P/B ratio below 1 can signal that a stock is undervalued, as its market price is less than the value of its assets. This may indicate a potential investment opportunity if the market is underestimating the company's true value. However, a low P/B ratio can also be a warning sign of deeper issues, such as declining profitability or outdated assets. Conversely, a P/B ratio above 1 suggests that investors are willing to pay a premium for the stock, often due to expectations of strong growth, competitive advantages, or valuable intangible assets like brand strength or intellectual property. To identify good investment opportunities, the P/B ratio should not be used in isolation. Combining it with other metrics, such as the price-to-earnings ratio, PE, or return on equity, ROE, provides a more complete picture of a company's financial health and growth potential. For example, a company with a low P/B ratio and a high ROE might be an attractive investment, as it suggests that the company is using its assets effectively to generate profits. When analyzing the P/B ratio, it's also important to compare it with industry averages and the company's historical performance to determine whether the valuation is justified. To calculate the P/B ratio easily, tools like the price-to-book ratio calculator on fairvaluecalculator.com offer a straightforward solution. On the calculator page, you simply input the market price per share, which can be obtained from financial platforms like Yahoo Finance, and the book value per share, which is usually available in a company's financial statements or calculated from its total equity and outstanding shares. With a single click, the calculator provides the P/B ratio, allowing investors to make quick and informed assessments. In practice, the P/B ratio is an essential tool for value investors looking to find stocks trading below their intrinsic value. For instance, during periods of market volatility or economic downturns, some fundamentally strong companies may temporarily trade at low price-to-book ratios, creating excellent buying opportunities. By regularly evaluating the P/B ratios of companies within a particular industry and using reliable tools to streamline the analysis, investors can identify undervalued stocks with strong potential for long-term growth. This approach not only saves time, but also ensures a more systematic way of making informed investment decisions.